Hey Dave, this is Crude Oil Trader. Just wanting to answer a couple of your questions regarding supply and demand level. So just keep in mind, I'm no expert or will claim that I'm the guru at this. I think everybody knows Sam Seiden pretty much kind of pioneered the idea, and this is how he kind of shared his institutional experience because he could literally see all the orders that are coming in that are coming from the institutions, big money traders, the smart money rather than the dumb money. So you had a question about this, so I'm just going to play it real quick, and I want to make sure that I'm answering all your question here.
Now, I do believe these are fresh levels. And crude oil trader, if you can let me know your opinion of this, I'd really appreciate it as well. So these are the lows coming back to.
All right, so I'm going to argue that these aren't fresh levels. And the reason why is that you have all these pivot points that's already been taken. So if you can imagine, I would, so you're in a 1 hour chart here. So let me actually switch over to a 1 hour. And then you are, I'm going to guess this is about the 58.40-ish level. Let me see here. So 58.40. So I think it might be this one right here is what you're pointing at. Yeah. So this is not considered a fresh demand just because the volumes that's already been done out here. I mean, if anything, this is more of a accumulation, right? So if you're trend trading, one of those things that you watch for is accumulation before like a price explosion, either to the up or downside. So this I won't consider kind of a fresh level because one, if you look at all the, the videos that Sam put out there, he drills down from a weekly chart, daily, 4 hour, 1 hour, and the list goes on and on. So you're already kind of in the higher time frame looking for price, right? And that's what he normally does on the. I've been to several of his webinars. I think at one point he was leaving Online Trading Academy, and he actually started putting out videos. It's not posted anymore. He took it out, but I was lucky enough to be in one of those. So he actually, you know, showcased some of these. So so just so I could show you, I guess, the thinking process behind this. We'll look for several quality supply demand level. So the first thing that he does is, you're really looking for a strong move, right? For instance, this one right here is a strong move right here, and then this one is a strong move down. It's just like you see sea of red, right? And especially this one right here, I already highlighted. So so if you're looking for a fresh level supply and demand level, you really don't want to be trading anywhere in this range. Like for instance, this one 64.50. Let me see. Let me put in a box. Maybe it's a box. Box is probably better. All right. So you don't want to be trading looking for supply demand level right here because the idea is that this is nothing more than accumulation, right? So the idea of if this level leaves somewhere, you're more likely will get or I guess you'll get stomped if you try to catch this falling knife at this level because you're right, there's more likely institution are probably have their stop just right below that. So but a bank or somebody who could see the books, they know how much volume that's in there. So if I had a bigger money, so if this guy is $1 million account and this guy is a $10 million account, they know how much volume that was bought over here, and this goes with computers too. Actually, computers now, I read this article that you know, you get a client who's wanting to buy at a certain level and sell at a certain level. They'll literally set the algorithm to where it'll do a kind of an average buying. So that's why it's kind of going meandering on sideways. But the average price, you know, if their client says, hey, you know, I want to be in at 64 and sell it at 66, then they'll just swing the price here in such a way that the amount of volume they need is an average price of $64, and that's why this is happening the way it's happening, right? So going back to so I guess what I'm trying to say is that level supply and demand would not be here. It's just because it's a lot of volume has taken place already. So you know, smart money would actually try to plow through that and then look for levels right below it. So that's why if you see this price right here, you know, this is kind of where you would more likely want to, you know, buy, just because it already left this level. And let's see, it keeps switching between prices. Like you see, this one rallied and then kind of base and then exploded again and then exploded again. So the origin of this price, you know, you would argue that, you know, be right there, right? And then that's why this thing kind of bounces and went onto this level. And at the same time, if you see, you got another consolidation right there. So this is institution building up steam, ready to plow down prices. So yeah, if you're a breakout trader, it makes sense to just kind of put your entry right here, and then, you know, the only drawback to that is if institution is not done accumulating volume and then you do a breakout trade, he could just reverse on you, come back up, stop you out, and then plow back down. And I think that's what happened on one of your swing trades. So that's why, you know, you want to wait until the decline happened first, which Sam always talks about, and then that gives you the information that there is selling here. That's the confirmation that there is selling. So when it retraces back up, there's where you sell, right? So this on a daily, this is probably all wicks right here, if I bet on it, and we can probably do that some hour after here. So as you can see, like, you see how much this is on the hour chart. You know how much time is really spent. You know, if you compare all the number of bars, right, compared to this one, I mean, this is a lot. This is actually like 3 days worth versus this one's like half a day. You know, and as you can see, you know, this thing is nothing but green going up there. And one of the things that Sam talks about is, you know, um, people not getting their price filled at these levels, because now you're really competing with banks and institutions trying to, you know, sell at the same price level. So he actually recommends that, um, you know, to kind of get below that and then put your stop right above it. So he's asking you to take more risk, essentially, or increase your range to where you're trading, because the fact that you know, if you didn't know that, you know, the price level would just get to here, and then at some point it'll kind of decline, right? So we're looking at an hour chart, right? So that's why this is why it would make sense to sell, because now we know three things. You know, you got a huge decline in price, right? And then now it's trying to go up back to that level, and as you can see, it didn't even make it all the way over here. It just kind of plows down and comes back down, you know. So my entry would be based off of, you know, extensions. So, you know, and you hear him talk about, you know, chart offering 3 to 1. So as you can see, this one is doing 4 to 1. So if you risk from 0 to minus 100% here, that's kind of the range that you're going to trade. So if you trade this level, this box, so that's a whole range, and then imagine if I'm just going to paste and copy it. Let's see, duplicate drawing, and then so you got, so that's, so this is your risk, and these are all your rewards, the boxes that's underneath it. Anyhow, that's going to take me a long time, but yeah, these are what this, the 100 percentage are for. I just created a tool so I can simply see, well, is this risk worth the reward of, the answer is yes, because you know if you have a 3-to-1 risk ratio, at least what the chart is going to give you. So you just risk this much to get that much, right? So 3-to-1 is a good risk reward. And same goes for this one right here. You're looking for a huge decline in price, and you can see this one nothing but red bars, right? So, and we know we're already on the downtrend just because of the fact that this thing never even comes back. It just kind of kept making lower lows on the swing. So same goes for this one. I think that's what's missing, is that measuring out your risk reward. And I know it's like, well, the chart has already happened, so I'm just showing you how to use the tool, right? So again, here it's giving you a 4-to-1 risk ratio, right? But you don't really care about, or this one, I mean, it's going to give you more than that actually. So your first trade right here, he always talks about he does a 2-to-1 risk, I think, but he needs at least 3-to-1. So because I guess there's no guarantee that it'll just plow to the 3-to-1 risk, but at least at 2-to-1, you're already a winner. Your money's in the bank already. But and this happens all the time, by the way. So now I'm just focused on these levels. Again, these huge price swing consolidation, that's not really a supply demand level. Like for instance, this one I probably won't use this as a supply demand level because it's already been used up by this one. So if you look at this, it just slides back down, and then you would think if this thing is still downtrending, it'll go right through this, right? But that's the exact opposite. It just, when it tries to plow down, so that's support. It's not, there's a difference between support resistance, supply demand levels. So this one kind of shot up, and then next thing you know, it can't get any lower, so you know that there's buyers there. But you can see this. So the origin of this move, let me just focus on this one, get a box here. So the focus of this move is, from here to here, the origin is this level right here, and then you got the strong bar that came up. So this bar absorbed all of that order, and they know that risk reward is potential here, so they took it. Or whoever's buying, I guess that's probably bank. Right? Because now there's a chance that they can get this premium 62.25 and potentially higher. And what I would caution you on is this consolidation right here. So here's another strong level right here that's sold off. But when you see consolidation below that, there is a very, very good chance that this is not a supply, or be a supply level, just because of this consolidation. A lot of times what I would see is that, with the strong supply or with this strong selling here, and then suddenly it consolidate right below that, there's like, I don't know, 90% chance that it'll just plow right through, and essentially stop you out. So anyways, it's about 15 minutes worth of information here, or at least 14 and a half. Hopefully I answered your question. Until then, yeah, just if you have any other question, I'll try to share you whatever I have. So I just wish you luck on your combine. Anyhow, take care.